But anyway, let me get into, what I think happened. And of course, I don't have any proof, right? I am just trying to make sense out of something that really doesn't make any sense unless you view it from the prism that I'm looking at it. So gold and silver prices had been moving up by, record amounts. And the dollar had just fallen to a 4-year low, the dollar index. And this dollar had fallen to an all-time record low against the Swiss franc. And the bond market was starting to roll over. I think that Scott Bessent and some other people close to the president talked to the president and said, we got a problem here, right? Maybe Jerome Powell thinks what's happening in gold is irrelevant, but it's not. It is very relevant. And I think there was a real danger of the gold price and the silver price continuing to rise, but have that spill over in a more damaging way in the foreign exchange market and in the bond market. So I think the Trump administration realized that they needed to do something to stop this, right? They had to figure out a way to kind of derail this train, slow it down, do anything. Buy some time. And so what I think they did is they coordinated with some short sellers, whether it's big banks, about, going after silver on the Thursday. Because if you look at what happened, right, the huge drop in the price of gold and silver in just a few minutes is the result of a huge sell order hitting the futures market, like randomly, like at the market. Now, if you had a lot of silver or gold that you wanted to sell, would you just dump it on the market all at once? Or would you try to slowly get out without impacting the price or impacting it as little as possible so that you could get the highest possible price for the gold and silver that you're selling? That's what would make sense. But if you just dump a huge order on the market, knocking the price down, meaning that you end up selling your gold and silver at a much lower price than you might have got had you, been more quiet about gradually selling. It's clear that the real intent of the sale was not to get a good price on what you're selling, but to drive the price of what you're selling lower. So it was an attempt to move the market down, and it worked, right? The market went down a lot. But then what the government did is Donald Trump ended up on Friday morning, sooner than was anticipated, because it was supposed to happen next week or this week. He announced his pick, Kevin Warsh, to be the new Fed chair. Now, when that pick was announced, there seemed to be a coordinated, PR campaign around that pick, that it was a surprise pick, even though, he had been a front runner, all along. He wasn't the front runner, but he was, a pretty good bet, like 30%, 40%. I mean, he, from the beginning. So it's not like he's a major outlier. He's somebody that was out there as, one of the guys, one of the top 3 candidates for Fed chair. So it's not like this, is a complete shock, right? But they try to spin it as if nominating Kevin Warsh means that Trump has now done something that was unexpected. And that's because they're now positioning Warsh as this major inflation hawk who doesn't like quantitative easing and who, doesn't like low interest rates, saying he's one of the few FOMC members when he was there before, around 2008 timeframe, who was arguing for higher rates and was a critic of quantitative easing. And so all of their media reports, and I think the administration was behind this narrative, and Wall Street ran with it, that, this is going to be, Warsh is going to be a hawk, and, he's not going to be a Trump puppet. He's not, Trump's not going to, be pulling the strings, and that he's going to be more hawkish than Powell, that he's probably less likely to cut interest rates than Powell, and maybe even he's going to start advocating for rate hikes, and maybe he's going to want to go back to quantitative tightening, right? This is how they're spinning it, right? That he's a real independent guy, hard money guy, Austrian economist, almost like they nominated me, right? Peter Schiff, or, they're not using my name, but, they say, well, maybe it's like Judy Shelton, or, like it's an unconventional pick, but this guy, is going to shake up the Fed in that he's a hard money guy, who really wants to fight inflation, right? This is what they're saying, right? And so that helped fuel the sell-off in gold and silver. And I think whoever it was that started the selling on Thursday had the inside information that that was probably going to happen. And it was all part of the plan to first hit gold and silver on Thursday, and then, that like a 1-2 punch, get the technicals like a reversal of one day, and then come out with this supposed surprise game changer to say, hey, everything you were worried about, right? People were worried about a loss of Fed independence. They were worried about, a Fed that's going to be slashing rates and doing QE. And in one, swoop, they diffuse that bomb and say, oh, look, Trump did something completely unexpected. So all the people who were buying gold and silver because they expected easy money, right? Rate cuts, lots of money printing, inflation. You're all wrong, because look who Trump picked to be the Fed chairman. He picked Kevin Warsh, right? He's an ultra hawk. It's like Paul Volcker, right? This is what is out there in the media. And I think it's all a bunch of BS. I don't think that Trump would have appointed Kevin Warsh if he thought that's what he was going to do. Trump has spent his entire presidency criticizing too late Powell. Why is Trump criticizing Powell? Because he thinks we should have bigger rate cuts than the ones that we've already had. He wants to get rid of Powell because he hasn't cut rates enough. And he told everybody that he wants to put somebody at the Fed who's going to cut rates. Now, the gold and silver market believed that, which is why gold and silver hit record highs. But now we're expected to believe that that's not the case, that Trump has had a change of heart, that he no longer wants a Fed chairman who is going to cut rates. He wants one who's going to raise rates. And, Powell is not raising rates, so let's get rid of him and put somebody in there who's going to hike interest rates. There is no way that that is the case. Now, maybe what they're trying to do is create the false impression that they've put a hard money inflation hawk at the Fed so that when he does cut rates, people will think, well,
sometimes the most important market events are the ones almost nobody understands in real time. They happen suddenly, violently, and seemingly without logic, at least until you step back and view the situation through the correct lens. And what we just witnessed in gold and silver markets was precisely one of those moments. In fact, I can make a strong case that this might go down as the single most important 24 to 48 hour period in the monetary transition that I've been warning about for nearly 2 decades. The difference this time is that for once I'm not the only one saying it. Central banks, foreign governments, and even the bond market itself are practically screaming it. But don't worry, Wall Street, the financial media, and CNBC are still completely clueless. That part hasn't changed. Gold and silver were melting up, not drifting higher, melting up. When silver moves $6.5 in a single session and blows through $100 like it wasn't even there, something is deeply wrong with the foundations of the monetary system. And I don't mean wrong in the sense of, oh, inflation's rising, or, oh, fiscal deficits are a little high. No, this is systemic. This is the kind of move assets make when the truth can no longer be papered over, literally. Gold was on its way to $5,000, and silver barreled past $102. Those are not speculative numbers. Those are crisis numbers. Those are the global monetary system is losing trust numbers. And then, suddenly, out of nowhere, a perfectly timed, completely unnatural, market-distorting avalanche of selling slammed into the futures markets. And notice what I'm saying. Selling in the futures market, not the physical market. Not one sovereign mint on earth saw a line of sellers around the block. Nobody was dumping their coins. Physical premiums weren't collapsing. What collapsed was the futures price, because massive coordinated selling was dumped onto the screen with the sole intention of smashing the price. No rational seller behaves this way. If you want the best price, you don't market dump billions of paper exposure in seconds. You quietly scale out. You feed the bid. That's how normal trading works. But this wasn't normal, because the goal wasn't to sell. It was to break the confidence loop. Think of it like this. Imagine you're holding up a huge sheet of plywood against a hurricane. You can brace it for a while as long as the wind direction is stable. But once the storm shifts direction, once the force moves against you, that plywood becomes a sail that yanks you off your feet. You're not holding it anymore. It's carrying you. And that is exactly the position the financial system is in. For decades, they could suppress precious metals because everyone wanted dollars. But now that people are fleeing dollars, the artificial weight they've used to hold gold and silver underwater suddenly acts in reverse. The suppression becomes the fuel for the explosion. So what happened? Well, I don't have the smoking gun, but I do have the smoking pattern. Gold and silver go parabolic. The dollar index hits a multi-year low. The Swiss franc at an all-time high against the dollar. Treasury yields begin to wobble upward. Foreign central banks are selling dollars and accelerating gold purchases. Margin stress begins appearing at major commercial banks and futures brokers. The alarm bells were ringing at full volume. And then Thursday happened. A gigantic block of paper selling hit the metals markets, completely disconnected from fundamentals, completely impossible to rationalize through normal market behavior. It was the monetary equivalent of a fire alarm being pulled. Somebody was trying to stop a stampede. Somebody wanted to create a reversal candle on the charts. And for a few hours, they succeeded. Gold and silver crashed hard. But then Friday morning, the next shoe dropped. And it was not a coincidence. Donald Trump, earlier than scheduled, unexpectedly announced his nomination of Kevin Warsh as the next Federal Reserve Chairman. And immediately the media began parroting the same storyline. Warsh is a hawk. Trump surprises markets with tough Fed pick. Warsh may raise rates. Warsh critical of QE. Warsh is independent, and so on. Headlines everywhere. Social media buzzed. Trading algorithms reacted. Treasury yields dipped. The dollar got a tiny reprieve. And of course, gold and silver softened because suddenly the narrative was, rates won't be cut. Maybe they'll even rise. What a beautifully timed 1-2 punch. But here's the part they're hoping the public is too economically illiterate to understand. There is no universe in which Donald Trump appoints a genuine hard money hawk who wants higher rates. None. Zero. Not even in the multiverse. Trump has spent years insulting Jerome Powell for not cutting rates fast enough. He wanted negative rates in 2019. He wanted QE on steroids in 2020. He berated the Fed repeatedly for being too tight. So, we are now supposed to believe he suddenly wants a guy who might raise rates? Give me a break. No, the administration needed a story, a narrative shift, a psychological release valve to cool down gold, silver, and foreign exchange markets. They needed something to buy them time, because the system was showing cracks big enough to drive a treasury auction through. This wasn't about economic philosophy. It was about emergency optics. Let me spell out how this works in Washington. If the public starts believing the Fed has regained control and might get tough on inflation again, then gold and silver cool off for a little while. Treasury markets stabilize for a little while. The dollar stops melting for a little while. And most importantly, foreign creditors, China, Japan, Saudi Arabia, pause their selling for a little while. That's all the administration wanted. Time. Time to prepare new policies, time to coordinate with foreign allies, time to push the panic out of the headlines. But the reality is, the fundamentals did not change. Warsh didn't even say anything, yet markets reacted as if Paul Volcker returned from the dead. All based on headlines deliberately fed to the media. Here's the truth nobody wants to say on television. Warsh, hawk or not, will cut rates. He will print. He will monetize debt. He will do whatever the administration demands because the alternative is systemic collapse. You think he's going to tank the stock market into a 60% correction? You think he wants to preside over a treasury market meltdown? A banking crisis? A dollar crisis? Of course not. He will do exactly what every Fed chair has done since the 1970s. Talk tough, act dovish, save the system with inflation. And the markets will figure this out soon enough. This is why the gold and silver smash lasted mere hours. Because artificial selling doesn't eliminate real demand. It just creates a buying opportunity for people who understand what's happening. The same way they smashed gold in 2008 and it doubled within a year. The same way they smashed it in 2013 and central banks bought more in 2014 than any year in modern history. Every manipulation becomes the seed of its own failure. There was a tweet circulating Friday from a macro account that said, "If the Fed was truly turning hawkish, silver wouldn't have bottomed within hours. Someone tried to stop a forest fire with a water gun." Exactly. And the real giveaway is what happened in treasuries. The yield curve didn't normalize. Foreign selling didn't stop. The dollar didn't rally beyond a short blip. Bitcoin didn't suddenly surge as an alternative. Instead, the fundamentals continued pushing, and gold and silver began stabilizing well above previous resistance levels. That's not the behavior of a market that believes the Fed has turned hawkish. That's the behavior of a market that knows it just witnessed political theater.